This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So let's look at example number 2 and see how all of this fits together. So we have Tina. She's in example number 2. She sold a painting on the 1st of July 22 for 500,000. She'd purchased the painting in February 97 for 350,000. She also disposed of a commercial investment property for £310,300 on the 1st of December 2022 and incurred agency fees, incidental costs of sale, for £15,000 on the disposal. She had purchased the property in August 1998 for £200,000. In addition, she sold an antique vase for £10,000 in January 23, which had cost her £15,000 in September 2020. She has losses brought forward from the previous tax year of £15,000, and her taxable income for the year 22-23 is £50,000. First things first, always remember this is the tax year we are dealing with, 22-23. Make sure the sales, commercial property December 22, vase January 23, 3 items that she sold there, that they all fit in that tax year. They haven't given you something that falls in the next one. Now, when you have a list of things like this, I would suggest that you set up the pro forma first with all the headings, and let's do that. Let's start with that so that kind of works out. So we need several headings. Okay. So the first asset. So this is her capital gains for Tina for 22-23. Important to put your headings in so that the examiner knows exactly what you're doing. They can find their model answer that matches yours. Hopefully it'll look exactly the same. Now, we have a painting. We have a property. And we have a vase. Now, all of those assets, where's my pound signs? There they are. Need to be calculated. But we also have the annual exempt amount, which we can now put in there. And again, never guess. Leaving lots of space, lots of gaps. You can set this up less. Do you remember we had the losses in the year and then the losses brought forward losses? The question said they came to 15,000. So that's going to give us our taxable gains. And then tax due, we can work that out as we get further down. Now, if all you do, and I don't want you to do, if all you do is that, you're going to get 2 marks for it, because you know where the annual exemption goes and you know where the losses brought forward go, and you've put them in the correct place. So sometimes you need to do these pro formas in a way that's going to get you maximum marks, and in a way that, now these 3, there may be something in there that you think, oh, I'm not sure how to do that. I'm not quite sure how to do that one. And you think, well, it's the first one. Or if I can't do the first one, I can't do the whole question. No. Do what you can. If you can't do the first one, then leave it. Do property income. Do the proceeds less the cost. Do what you can do. Add in what you can't. Leave the pro forma. Go and do something else in the exam. And then when you finish doing everything you can, you then go back to doing the bits that you're struggling with. This is about getting maximum marks. Okay, you need to pass this TX module to move on to the other modules. You need to get as many marks as possible. So sometimes these things you do in bits, not in a logical order. And that's so important with any tax exam, particularly when you get to the higher levels. You do what you can. Don't try not to worry about what you can't. If you get more than half of this right, you've passed it. Excellent. Okay, so let's have a look at the painting. The question said we had proceeds of 500,000 and we had a cost of 350,000. Proceeds less cost equals gain, and the gain in this case is 150,000. Now it's not a residential property, it's a commercial property, so it goes in that column. Okay, so proceeds less cost equals gain. That was asset number 1 she sold in the year. Asset number 2 was a property. So we had proceeds of £310,300. Now we had cost of sale of 15,000, which gives us a net figure of 295,300. Now we take off the cost, and the cost was 200,000, which leaves us with 95,300. Proceeds less cost equals gain. Now the vase, proceeds 10,000 less cost 15,000. Ooh, that is a loss. So do you remember in the notes? Let me just go back to these notes and show you these notes here. It is then necessary to calculate the net chargeable gains arising in the year, all the gains less the allowable losses. So we've just done this. We only had 3, 2 of them were profit, 1 of them was loss. We had gains in the year, losses in the year. Less the annual exemption, less losses brought forward. That's what we're doing here with this example. So we now need to add 150 plus 95,300 and deduct from that £5,000 because that is the loss in the year. So that comes to 240,300. Now the annual exemption is 12,300. When we deduct that, we come to £228,000. Less losses brought forward. Now all of this is now maths because you set it up all nice and neat. It's just maths now. Best way to do it. Okay, now what rate does she pay tax at? Okay, what is the rate? Her income tax position was that she had £50,000 worth of income. That exceeds the basic rate band, and therefore the rate is 20% because she is a high rate taxpayer. Okay, see that note there? Write it in, please. It will get you half a mark. So the tax is 213,000 at 20%, which is 42,600, and always write down it is due 31st of January 2024.